What's up everyone, welcome back to Earn It, Save and Invest It. In this video, I'm going to be talking about is the next stock market crash here. We just got into this war and conflict with Iran. The oil prices have been going up. So I'm going to go over a few things that could be saying if we are in the stock market crash and what you could be doing. Now, this is kind of a typical reaction of how people, are, right? You got this person's jumping out the window, right? You have people, when you have a stock market crash, they kind of go crazy, right? So this is how it should be. When you have a stock market crash, and it says right here, when stocks drop in price, it's like your grocery store going on sale. You buy more of your favorite items. Right? Imagine if the strawberries and all the stuff that you buy the most, my daughter loves strawberries. If those were all on sale, I love it. I'm like, I might buy 2 packs, right? Imagine you walked into a store and you saw this. And it was like 25% or 40% off the stock. And the business didn't change. You'd be like, yeah, of course. Now, of course, we're going through the AI, technology revolution, but at the end of the day, these are all the companies that are probably going to end up profiting from this revolution. So it's just interesting on how the market can react. This was the start of last week, March 9th. Wow, March 9th, and we're in this war conflict with Iran. It went down because the oil prices continued to soar up, and then Trump said, you know what? No, things are okay. The war's coming to an end. So the stock market said, all right, great. It's very emotional. Shot back up. Well, no, that's not really the case. Iran keeps bombing. Iran is saying, we are not done. What are you talking about? We're not even in talks with you. And so the market then continues to drop. So as you can see, before all of the back and forth, we were already, from last Friday, we were down about 2% on all the indexes. But since the top of, figuring out, no, we are not done, this war is not close to being done, we're down about 3 to 4% on the indexes, right? So that is a difference. Now, if you look at how the market has performed recently, we kind of had this little double top, right? It's basically at the same. So I'm counting from here because we did come back up and reach it. Now we're down 7.7% in 44 days, right? You can also say we've been down that since November. That's what, 5 months? So we're down 7.7 in 44 days. We're also down that same amount in 5 months. And this is the NASDAQ. Oh, no, sorry. Yeah, NASDAQ. This is the S&P 500. Down 5.25% in 44 days, 0% in 76 days. The NASDAQ, the S&P 500 have gone nowhere, right? And the S&P 500 actually had a top over here where the NASDAQ kind of double topped, right? So that's why I'm kind of like going more from that spot. Same with the Dow. Dow, it's the last 30 days, down 7.3%, 0% in 161 days. So is the market correcting? What's going on? The VIX also shows a little bit of a, what's going on, right? We had the carry trade was that 2024, almost 2 years ago. It shot up so significantly and so fast, right? I mean, there was a little bit of turbulence because it was around that time of the year, August, and then it just shot up. And it went all the way up, what is that, 60? That's past 40, but it did pass 60. 60 is way up there. We had the Liberation Day with the tariff scare, right? That, you can see, we already knew tariffs were going to happen. And there's all these talks about it. And so the VIX went up, then it dropped back down, and then it shot right back up all the way. Did it hit 60? It hit 60. And then it came all the way back down. As you can see, we've had a few, of these right here where it passed 25, but it hasn't reached 30 since Liberation Day. Well, we hit 30 with the Iran conflict. So as you can see, though, this is like the VIX is really pushing up steadily. It's steadily pushing up rather than just kind of, shooting up and down, how it kind of does when it goes. I mean, this was a little steady rise up, but this is just, look at that. It's just so steady, going up and up and up, and then we have this conflict with Iran, right? Because this whole year has not been well for the stock market. So that being said, If the VIX keeps creeping up, I would start looking into buy, because when you buy in those spots where the VIX is shot up like that, it's usually turned out pretty well. So recession odds climb as Middle East conflict escalates, according to prediction market. So now people are predicting maybe a recession. This is the AAII Sentiment Investor Survey. Now, as you can see, we now have 46% of the votes bearish. Typically, it's about like I don't have the historical average is 37.5 for bulls, 31 for bears. Well, we're clearly off our historical averages for everybody, right? We're low on the bulls, we're high on the bear. I mean, look at that. We're 15% higher. So the market is definitely bearish right now. What impact does the military conflict, basically with the whole Iran stuff, is it bearish for stocks? That's what 38% people think. A reason to be a little bit more cautious, 33.5, and then it creates a buying opportunity, 21.9. So you have about what? This is 71% or so of people saying it's bearish. So the market is definitely feeling bearish. And this is the fear and greed index. Now, if you look right here, this is the main word right here. What emotion is driving the market? The stock market is primarily driven on emotions. Whether or not there's good earnings, bad earnings, this, that, there's a lot of emotion being driven. It doesn't mean that it's making the wrong decision necessarily, but it's driven a lot with emotion, so sometimes it can be extreme. So right now we're in extreme fear, and as you can see, the previous close, we were in extreme fear. A week ago, we were in extreme fear. A month ago, we were in just fear, but what's crazy is 1 year ago, we were in extreme fear, lower than today. That's how bad it was just a year ago. So it's just, you have to understand that there will be times, there'll be the periods where you buy a stock and it doesn't move for a little bit. It kind of goes up and down from where you bought it, but then after a year, it doesn't do anything. It takes patience. Sometimes that's going to happen, and then if it's a good company, it will eventually start moving to the upside. So I asked, AI. Well, and I already knew the question, but I wanted to see the explanation. What does the stock market fear most during a war? And it says, in the context of war, the stock market fears uncertainty more than the conflict itself, while the actual outbreak of the war often brings clarity that allows markets to stabilize. It is the unpredictability leading up to the conflict and specific economic side effects that triggers most significant sell-offs. So, as you know, this war with Iran it's shooting up the oil prices. And we have no idea if this is going to end, because Iran now has their new supreme leader, and he's the son of the one that died, and his family has just been obliterated, basically. So, and he's kind of a more extremist, in a way of. So we don't know. And this is also a part economically about the Strait of Hormuz, where it's like, it's getting blocked. And so that has a lot to do with the oil, the gas prices. So it's like, we don't know. And when there's no clarity and no uncertainty, that's going to add to the downfall of the stock, not downfall, but the downtrend of the stock market. So primary market fears, we have the unknown, uncertainty, surprise conflicts, right? This was kind of a surprise. We didn't walk into 2026 thinking we're going to be in the war with Iran. Sustained energy shocks, right? The oil price, now we're going into the reserves, but this is the biggest reserves that we've ever had to dip into ever. And so it's like, this is big. And then recession odds. Of course, some people might be like, okay, now there could be a recession, and that's what I just showed you, is the odds have gone up. The historical performance and the war puzzle. Despite initial fear, U.S. stocks have a long history of resilience during wartime. Typical recoveries on the S&P 500 is about 42 days. So, not too bad. Outperformance. Historically, S&P 500 has often delivered positive annualized returns on war, sometimes exceeding peacetime averages. For example, the Dow rose a total of 50% during World War II. So there you go. Volatility paradox. Some studies, including the blah, 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 suggest that the market volatility can be lower during wartime because massive government defense spending creates more predictable revenue streams for many industries. So it's not the actual war itself, it's the clarity, right? Why don't we have, when you don't have the clarity, that's when you're just going to see the stock markets go down. Sector-specific impacts, gainers, you're going to see defense, aerospace, energy, those stocks will go up. And of course, the losers are going to be the ones that are associated with the fuel costs and stuff like tourism, airlines, stuff like that. This is how, again, just to cap it off, this is how most people should be treating stocks. You want to make sure that there's nothing going bad with these stocks. I mean, I don't know what sign that is. You want to make sure stuff is going on well with your stocks. You don't want to just be buying at crazy prices because you just see it at a crazy price. There could be something really fundamentally wrong with the business. But at the same time, most of the time when these things happen, it's just good to buy stocks on sale. One thing I do want to show you really quick about the stock market, why I think this could be a very big moment for us because we can all make some money. This is the amount of days that has been through. So just let me explain really quick. All of these triangles represent a 10% or more down draw, right? So downturn. So this one is 36%, right? This is 2022. This is the Qs. It tracks basically the NASDAQ. So this was down 36% in 2022. So this big triangle represents that downtrend all the way back to where it comes back up to meet where it fell from, the all-time high, right? So I'm tracking the amount of time in between triangles, right? Now, this is a little bit different. I don't like to track the time coming out of a huge crash like this because it just doesn't, like, you have to be out of the triangle, right? And sometimes you even have a triangle within one, but it's just when you have such a heavy stock market crash, you're going to see a big uptrend, right? But as you can see from when we reached out of this, right? When we got out of this triangle right here, we had about 219 days, right? Right now we're at 218. So there's been 218 days since the Liberation Day, right? It was Liberation Day, we dropped, we came back up. Since then, it's been 218 days. It was 83 days before that, 219 days before that, 168 days before that, 60 days before that. Sorry, they're just that way because I had them, they move. 79 days before that, 132, 91, 427. This was November of 2016, all the way to January, February 2018. That was the last time we had a bigger number, basically. Now, obviously, as you can see here, we had a long streak. Again, it's going to happen when you're coming out of a heavy stock market crash and all the earnings, all the businesses are doing better. So, but besides that, it's been, what? Since the end of one, it's been 8 years. So, to me, it seems like we're due. Like, how long can this stretch go, right? And that's 218 days from the top of the NASDAQ, right? And it's the second top. And we're still only 6.5% down. So we haven't even developed a full triangle yet. Right? If we go back and hit an all-time high, then I just feel like right now, I feel like this is it. I feel like this is it. This is the time where the stock market's going to start crashing a little bit. It doesn't mean that it's going to have to go down 20 or 30%. It doesn't mean it's going to have to do it for a full year. But I do think that this is the development of the new triangle. I do think that this right here is now our new triangle. It's going to be a new triangle, but we're only at 6.5%. To go to 7 or to go to 10, it's got to go there. Minimum, it has to go there to develop this triangle. So I do think that's going to happen. I think we're there. I think that's going to happen. I'm also a HIMS investor. I talk about HIMS, and I think that might be the one stock that it might shoot up so much because a lot of people are going to be like, well, what stock can we get into that's going to go up? With this market going down like this, what stock's going to go up? What stock can even go up, right? Well, HIMS can go up. It's very heavily shorted. They're making deals. The revenue is going, and they're not going to get heavily affected by this whole war, right? So, I don't know. The HIMS could shoot up a lot. because of this. So anyway, that's just my 2 cents about what I think is happening in the stock market. I think we're in the middle stages of developing this 10% triangle that I've been creating. And it's interesting because it has to happen. The market has to drop at some point. The market has to drop, and then it's going to pop, and then it drops, and then it pops. It's going to happen. We're in the middle of the pop. We're in the middle. It's like if you have a slow-mo camera, right? We're just like the needle's kind of sticking in. It hasn't popped yet. We're almost there. I guess popping is going up. Whatever, you get what I mean. Anyways, thank you for watching. Thank you for everybody who supports and likes and subscribes to my stuff. I just started a Discord channel and a Patreon. I've been trying to do more of this. It takes a lot of time. I've been spending all my spare time trying to get things done. So yeah, I'm just, hey, if anyone wants to support me, any little helps, because I would love to make this my full-time job. So anyway, thank you for watching. Thank you for supporting, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.